Hey everyone, I'm here to show you how I reached $100,000 with a modest income, and how you can too. It wasn't easy, and I made plenty of mistakes along the way, but I've distilled everything I've learned into a step-by-step strategy that anyone can follow. By the end of this video, you'll have a clear roadmap to building your wealth, even if you're starting from scratch. Stick around to discover the surprising tactic that supercharged my savings and the common pitfall that almost derailed my entire plan. Let's talk about playing to your strengths. In the investment world, there's a ton of different options: stocks, bonds, real estate, crypto, you name it. But here's the thing, you don't need to be an expert in everything. In fact, trying to master it all can actually hold you back. Instead, focus on what you're naturally good at or interested in. Maybe you have a knack for spotting trends in tech, or you're passionate about sustainable energy. Whatever it is, lean into that. By concentrating on your strengths, you'll make more informed decisions and likely see better returns. Remember, Warren Buffett stuck to what he understood, and it worked out pretty well for him. Now, let's get real about expectations. Hitting that $100,000 mark isn't going to happen overnight. It's not about getting lucky or finding some get-rich-quick scheme. This is a marathon, not a sprint. You'll have ups and downs, and that's okay. Some months you'll feel like you're crushing it, others you might feel like you're barely treading water. That's normal. The key is to stay consistent and keep your eyes on the long-term goal. Don't get discouraged by short-term setbacks or market fluctuations. Remember, even the most successful investors have bad days. It's about making steady progress over time, not instant riches. Let's talk about ETFs. They're a game changer for building wealth consistently. Here's why. ETFs give you instant diversification without the headache of picking individual stocks. I made the mistake of juggling multiple ETFs when I started, thinking more was better. Spoiler alert, it wasn't. Instead, focus on one solid, broad market ETF. Something like an S&P 500 index fund is a great place to start. Set up an automatic investment plan and stick to it, rain or shine. When the market dips, you're buying more shares at a discount. When it rises, you're riding the wave up. This simple strategy takes the emotion out of investing and lets compound interest work its magic over time. It's not flashy, but it's effective. Now, let's strike a balance between passive and active investing. Your ETF strategy, that's your passive foundation. It's like the reliable engine of your wealth-building machine. But here's where it gets exciting. You can turbocharge your growth with some active investing. I'm talking about picking individual stocks or exploring other assets you're passionate about. Maybe it's tech stocks. Maybe it's cryptocurrencies. The key is to keep this portion smaller. Think 10 to 20% of your portfolio. This approach gives you the best of both worlds, the stability of passive investing, plus the potential for higher returns with active picks. Just remember, with higher reward comes higher risk, so only invest what you can afford to lose in your active strategies. Let's talk about a crucial strategy: leveraging your realized gains. Here's the deal. When you make a profit in the market, it's not real until you sell. But here's where most people mess up. They either never sell, watching paper gains evaporate, or they sell and splurge on unnecessary stuff. The smart move? Reinvest those gains strategically. When I hit a big win, I'd take some profits and plow them back into my ETF or other solid investments. This creates a snowball effect, accelerating your journey to $100,000. But don't forget to reward yourself a little too. Taking a small portion to enjoy keeps you motivated for the long haul. It's all about finding that sweet spot between growing your wealth and enjoying the fruits of your labor. Now, let's dive into some key strategies that can really accelerate your journey to that first $100,000. First and foremost, automate your savings. Set up automatic transfers to your investment accounts every payday. This way, you're paying yourself first and ensuring consistent growth. Next, take advantage of any employer match on your 401k. It's essentially free money, so max it out if you can. Another powerful strategy is to increase your income through side hustles or asking for a raise. Every extra dollar you earn can be invested, compounding your growth. Don't forget about tax-advantaged accounts like Roth IRAs. They can significantly boost your long-term returns. Lastly, stay disciplined and avoid lifestyle inflation. As your income grows, resist the urge to spend more. Instead, funnel that extra money into your investments. Remember, reaching $100,000 is just the beginning. The habits and strategies you develop now will set you up for even greater financial success in the future. Let's talk about some common pitfalls you'll want to avoid on your journey to $100,000. First, don't fall into the trap of trying to time the market. It's nearly impossible, even for professionals. Instead, focus on consistent investing over time. Another big mistake is letting emotions drive your investment decisions. Fear and greed can lead to impulsive actions that hurt your portfolio. Stay rational and stick to your plan. Avoid high-fee investment products that eat into your returns. Look for low-cost index funds or ETFs instead. Don't neglect diversification. Putting all your eggs in one basket is risky. Spread your investments across different asset classes. Lastly, be wary of get-rich-quick schemes or hot stock tips from friends. If it sounds too good to be true, it probably is. Now, speaking of potential pitfalls and risks, I want to transition to a topic that's been on many investors' minds lately: Solana. In my previous video, I did a deep dive into Solana's recent performance, analyzing everything from its price movements to its NFT dominance. If you're curious about whether Solana is still a viable investment, or if it's facing its final out, you'll definitely want to check out that video. I cover some game-changing updates that could significantly impact Solana's future. Plus, I break down the risk-reward profile for those considering investing in this volatile crypto. It's a must-watch for anyone interested in the crypto market, especially if you're trying to build that $100,000 portfolio we've been discussing. You'll find the link to that video in the end screen coming up. Don't miss it. It could be crucial information for your investment strategy.